Welcome back. And before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Ahmed bin Sulayem, the executive chairman of the Dubai Multi-Commodity Centre, has announced plans to build the tallest commercial tower in the world as a part of the centre's 107,000 square metre business park expansion plan, designed specifically for large multinationals. Bin Sulayem was quoted as saying that the world's tallest commercial tower and the DMCC business park are the next natural steps to ensure they continue to welcome companies to the free zone. Currently in the concept design phase, they will cater to large corporations and multinationals that require significant floor space to buy or rent. The business park will comprise of 107,000 square metres of premium commercial and retail space. Bin Sulayem also revealed that over the past 4 years, DMCC has attracted more than 4,000 new companies to the free zone, 90% of which are new to Dubai. In 2013, they have accelerated this growth with an average of 200 new companies joining DMCC every single month. He added that this increased demand further demonstrates not only the confidence in DMCC in Dubai, but also underlines the need for new commercial space. The DGCX announced the launch of its newest futures contract this morning, based on the SENSEX, the blue chip stock index of India's bourse, the Bombay Stock Exchange. The SENSEX index tracks the performance of 30 of the largest and most heavily traded stocks, and the DGCX SENSEX Futures are the first ever futures contract to be introduced into the MENA region. The futures will be formally listed by the DGCX this Friday, the 5th of July, and will provide unique trading opportunities for international investors seeking access to India's economy. Well, we earlier spoke with Gary Anderson, the CEO of the DGCX, for the finer details.
We decided to launch the S&P BSE Sensex July of this forthcoming Friday. We have this collaboration with the Bombay Stock Exchange to launch the contract. It's a contract that is very much the barometer of the Indian economy. We have here within the GCC over 6 million non-resident Indians and high net worth individuals who would want to participate in this particular contract. And the benefits are that it's accessible, it's very efficient, and it will also be able to distribute this product further on behalf of the Bombay Stock Exchange itself. So that's what the press conference was about this morning. We launch on Friday, 5th of July at 7:30 in the morning. We already have price market makers who will make markets on our behalf, and also there will be price takers. So we're expecting a very busy opening on Friday morning.
The CEO went on to explain some of the benefits of the new futures contract, including a dollar denomination, contract specifications, and the added exposure to the Indian economy.
Well, the benefit here at DGCX is that the launch of Sensex is about it being a dollar-denominated contract, which means there is no INR currency risk for those people that are wanting to invest. The other benefits are that we will be able to distribute the product beyond the Indian time zone, as we're open 17.5 hours of the global financial trading day. So we have a great profile across Europe and also the US as well, and that's been down to the success of our dollar versus the INR Indian rupee contract. In terms of the contract specifications, the Sensex is based on 30 of the most heavily traded stocks on the Bombay Stock Exchange itself. So as a future or an index, it's a basket of stocks. It enables you to in one go grab exposure of the Indian economy literally, so without having to buy the 30 stocks, you just literally go in and buy one future, which gives you the exposure. The other thing about the contract itself, if you do have exposure to the Indian economy, it also gives you the opportunity to mitigate your risk by hedging your exposure on DGCX itself.
Dubai Duty Free has recorded a 13% rise in sales for the first half of the year to reach 3.2 billion dirhams. For the period, perfume accounted for the largest portion of sales at 496 million dirhams, with an 18% increase. Followed then by gold with a rise of 13% and 496 million dirhams. Sales of tobacco were up 13% to reach 269 million, and confectionery increased 15% to hit 258 million dirhams. Sales at departure were up 13%, while revenues derived from arrivals and public shops were up 15% and 25% respectively. Colin McLaughlin, the Executive Vice Chairman of Dubai Duty Free, also revealed that average spend per departing passenger stood at $48. He added that plans are very much in place for the opening of retail operation at Al Maktoum International in October of this year, and that they are busy working towards the planning of the new retail area with the opening of Concourse D.